we are fast approaching summer, so I want to give you 6 tips to spring clean your finances. First is to review your beneficiary designations on all your accounts and policies. Make sure that they're still who you want them to be. That's super important. You don't want an ex-spouse getting your IRA account. You don't want a parent inheriting your insurance benefits if you've been recently married. Make sure all these things are updated. The second thing is to schedule an appointment with your P&C agent, also known as your home, auto, and umbrella agent. Sometimes things throughout the year change. Maybe you had a recreational vehicle that you sold for some cash, but you're still paying the insurance on it, or it's covered under another piece of your policy that you didn't realize, so it's boosting up that premium. Sometimes home insurers boost up the value of your home, and maybe you don't agree with it. Make sure your coverage is exactly what you thought, and I would also definitely ask about an umbrella policy if you own a home, have children, pets, and something like a pool. Having an umbrella coverage is really short money to really expand upon your liability in the event something were to happen on your property or even while you're driving. The third thing is to calculate your cash flow. Make sure you're still living within your means and that lifestyle creep hasn't affected you. Sometimes we make little changes throughout the year that really ripple through the rest of our finances. Things like moving, upgrading our car, just some form of entertainment, taking on a project. Sometimes these things become real budget busters and we don't realize it. So really having a pulse on our cash flow and seeing how any changes throughout the year have affected this is really important. I've also had clients sometimes realize that they are saving a lot into their checking account and they have much more cash reserve than they need. And it's an opportunity to really get that surplus invested. So being more intentional and deliberate about how you're saving your money and allocating it is really important and something I'm happy to help my clients with. Review your cash reserve. So conversely, I have clients that sometimes are really diligent savers into their work retirement accounts, but they've actually left themselves very little in their checking and savings account in the event of emergency. It's not that uncommon that I have a client where they only have about $500 in cash, which really won't go a long way if something were to happen with their car or home or there's some medical expense. I wouldn't want to see them have to draw from a retirement account and pay the taxes and penalties on that. So really make sure your cash reserve is where you want it to be. I have another video on that, so check that out for more information as to how large your cash reserve should be and where you should be putting it. 5, run your credit report. Make sure your score is good. Make sure your report looks good. I use Credit Karma personally, so maybe start there. I was trying to use the 3 main bureaus, but I was really just getting my report itself, and it was coming to me in a way that I was even having a hard time understanding. Credit Karma does a really great job at showing you your score and really making your report easy to digest and understand. And last but not least, make sure that your level of savings is still in line with your lifestyle goals. Sometimes we find that our lifestyle does enhance and we're not necessarily saving an appropriate amount anymore to continue that lifestyle into things like retirement or education. So make sure that whatever our expectations are still in line with how much we're saving. Sometimes we get bumps at work, we get promotions, we shift roles, and there's more opportunity to save more money, maybe even max out things like our 401k plan, and we're not taking advantage of those opportunities because we just haven't revisited what we put in place years ago. So make sure to take a look at that, and conversely, sometimes things can press on us. Maybe we've decided to stay home and now there's just one person working within the household. So maybe it's actually time to scale back a little bit on the savings to make sure that we have ample cash reserve and that we have good cash flow and that we're not actually over saving toward things like retirement. Other adjustments can be made to accommodate a decrease in savings. If you have any questions or need help with things like analyzing your cash flow, reserve, goals, please feel free to reach out to me and schedule your free consultation on my website at powwowllc.com. If you like what you heard today, don't forget to just subscribe. Bye, guys.